Okay, the next problem we'll do is 3-2A. We're given account balances before adjustment, so a pre-adjusting trial balance, and then we're told 6 different adjustments that we'll need to do for the year, and then we're given a chart of accounts so that we use the correct account names. So the first thing that we want to do is to journalize the 6 adjusting entries required at July 31st based on the data presented. We want to refer to the chart of accounts for the exact wording of account titles. That's important in Cengage. As long as you understand the main idea, you'll be good for purposes of this class. Okay, so the first thing we want to indicate is that these are my adjusting entries for 7/31. Okay, so if we go back to our list of adjustments, the first one says unbilled fees at July 31st are $11,150. Okay, so the date is going to be July 31st. And it's unbilled fees. So we performed a service or provided a good for someone, but we haven't billed them yet, and therefore we haven't received payment yet. So we're going to record a receivable. They need to pay us. And it's for fees that we have earned but not yet received. So the amount is $11,150. For both of them. Okay, so an account receivable is an asset. By debiting an asset, we're increasing it. Fees earned is a revenue account, and therefore we're increasing equity. So we can see that my accounting equation stays in balance. My assets are increasing, and so are my liabilities and stockholders' equity. Okay, my second adjustment, supplies on hand at July 31st were $900. Okay, so supplies is a balance sheet account, so we should have started the period with some supplies on hand. So if we go back up to our first table, it tells me that my supplies had a debit balance of $3,350, and what the adjustment is telling me is that I ended with $900, so I need to calculate what that amount will be. So if I started with $3,350 and I ended with $900, that tells me that my adjustment needs to be for $2,450. Started with $3,350, I ended with $900, so that means somewhere in the period I used $2,450. $2,450 of supplies. So I'm going to debit my supplies expense, and I'm going to credit my supplies account. Okay, so supplies expense is an income statement account, and by debiting it, that means I'm decreasing my equity. And supplies is an asset account, and by crediting it, that means I'm decreasing it. So once again, my accounting equation stays in balance. Okay, adjustment number 3, rent expired of $6,000. So if we look up to our first table, it tells me that I had prepaid rent of $9,000. So of that $9,000, $6,000 of it expired. So we're still July 31st. So I'm going to debit rent expense, and I'm going to credit prepaid rent. I used up some of my asset, and it became an expense because I used it this period. And they tell me that it's $6,000 that I used up. So once again, my expense account decreases my equity. Prepaid rent is an asset. By crediting it, I'm decreasing it. So we can see that our accounting equation still stays in balance. Okay, adjustment number 4. Depreciation of equipment during the year was $8,950. So I'm allocating the use of my long-term assets. So I'm going to debit my depreciation expense and credit my accumulated depreciation. We'll talk all about these in later chapters, how we come up with these numbers. Okay, so it's an expense, $8,950, and my contra asset to my long-term is also $8,950. So once again, my expense decreases my equity, and my accumulated depreciation decreases my asset. My asset would be the equipment account, and then accumulated depreciation effectively decreases that equipment account. Okay, adjustment number 5. Unearned fees at July 31st are $2,000. So if we look up into our first table, at the beginning of the period, at the time we're doing our adjustments, we have unearned fees of $12,000 listed, but as of July 31st, we only have $2,000 of unearned fees. So I started with $12,000, I'm ending with $2,000, so that means I'm going to need to do my journal entries for $10,000. What am I adjusting? I'm adjusting my unearned fees, I'm reducing my unearned fees, and they're becoming fees earned. So I actually performed the service or provided the good, so they're no longer unearned, I've earned them. Okay, so unearned fees are a liability because I owe somebody for something, so I'm decreasing my liability by debiting it. And my fees earned act as a revenue account, so by crediting it, I'm increasing my stockholders' equity. So this one's a little bit different. Instead of having one thing on each side of the accounting equation, I have both on the right side. I'm decreasing a liability and I'm increasing a stockholders' equity, so it's still in balance. Okay, so for my last adjustment, they tell me wages accrued but not paid at July 31st are $4,840. So people worked for me, but I haven't paid them for it yet. So I have incurred the expense, and I need to also record the liability. So I have wages payable. They tell me it's for $4,840. I record that there. So once again, an expense decreases stockholders' equity. Wages payable will increase a liability. So once again, my accounting equation is still in balance. Okay, so moving on to part 2. We want to know what would be the effect on the income statement if the adjustments for unbilled fees and accrued wages were omitted at the end of the year. Okay, so if we go up here to adjustment number 2, we see, or adjustment number 1, our unbilled fees. If I hadn't recorded that, my fees earned account would be understated by the $11,150. I would have not recorded all of the income that I earned for the year. Okay, so for my accrued wages, which is adjustment number 7 or number 6, if I hadn't recorded that, my wages expense account would be understated. I wouldn't have recorded all of the labor that I used for the year. Okay, so if we combine these two, if we hadn't recorded these two adjustments. So the first one tells me that my net operating income is understated by $11,150. And if I hadn't recorded my wages one, my net operating income would be over by $4,840 because I wouldn't have recorded my expense. My expenses would have been too low. So if I combine both of those, we see that the under accrual of revenue is larger than the under accrual of the wages expense. So I'm going to be, my net income will be understated by the difference of those two, $6,310. All right, scenario number 3. What would be the effect on the balance sheet? If the adjustments for unbilled fees and accrued wages were omitted at the end of the year. So if I didn't record my unbilled fees my accounts receivable would be understated, just as my revenue was understated for $11,150. Accounts receivable is an asset, so it too would be understated by $11,150. Okay, so moving on to the next one, my wages payable. If I didn't record my accrued wages, that would be understated by $4,840. As such, because wages payable is a liability, it too would be understated by $4,840. So now what would happen to my owner's equity? That will come out because I didn't record my net income correct, and also my assets are understated, my liabilities are understated, so my owner's equity is also understated. So remember, assets equal liabilities plus stockholders' equity. So if assets are under by $11,150, liabilities are under by $4,840, what does that mean for stockholders' equity? It has to be under by $6,310 to keep my accounting equation in balance. So what are my total liabilities and owner's equity? Under by the $11,150. Once again, because I need to keep my accounting equation in balance. Okay, and the last part. What would be the effect on the net increase or decrease in cash on the statement of cash flows if the adjustments for unbilled fees and accrued wages were omitted at the end of the year? Okay, so these only affect my accrual accounting. When we do cash accounting, these didn't come into play because no cash changed hands in these transactions. So there will be no effect. None of the entries affect cash.